If you're married or common law, are you coordinating your tax returns or just filing separately and hoping for the best? Let's talk about it. Hi, I'm Nawaz, and I talk about Canadian tax and money topics without the jargon. Here's the thing, even though you each file your own T1 in Canada, there's a huge difference between filing strategically as a couple versus just doing your own thing. So, first, let's clear something up. In Canada, there's no joint tax return like in the US. Everyone files their own individual return, even if you're married. But, and this is important, you'll still need to report your spouse's information on your return. The CRA uses your combined family net income to calculate things like the Canada Child Benefit, GST HST credits, and other benefits. And here's why coordinating matters. You can claim medical expenses for yourself, your spouse, and your kids, but you get the credit when expenses exceed 3% of your income. It makes way more sense for the lower income spouse to claim all the family's medical expenses because the threshold is lower. You can pool charitable donations together because the credit rate increases after the first $200. If one or both of you have freelance income, such as DoorDash, Uber, consulting, or any other gig work, you need to track that income properly across both returns. And when you're coordinating, you can optimize who claims certain business expenses or decides how to structure deductions. And this is exactly why I built the Gig Work Tracker. It helps you stay organized with all your side income and expenses so you're not scrambling at tax time. It's available for just $14.99 and the link is in my bio. Now let's talk about childcare expenses. Usually, the lower income spouse has to claim these, but there are exceptions. If you're not coordinating, you might miss these opportunities. If one spouse has pension income, you can allocate up to 50% of it to the lower income spouse. This can save thousands in taxes and preserve income tested benefits. We recently also talked about spousal RSP contributions. So, the higher income spouse contributes, gets the deduction, but the money is in the lower income spouse's name for future withdrawal. This is perfect for income splitting down the road. Now, let's talk about the disadvantages. Honestly, there aren't many if you're in a healthy relationship with shared finances. It takes a bit more planning and communication. For most couples, the advantages are clear. You'll pay less tax, maximize your benefits, and keep more money in your household. The bottom line is, even though you each file your own return in Canada separately, you treat your taxes like a team sport. You plan together, optimize together, and you'll come out ahead. Need help with your taxes? Hit me up in the comments below or DM if you'd like to discuss your personal situation. And as always, follow for more Canadian tax tips. See you in the next one.